You want to know. What are the best stocks to buy now? Should you be buying this dip? And which stocks should you be looking at? And what prices? I've got 5 growth stocks that community members are buying right here and right now. The first stock is going to be MercadoLibre. Now, this is a stock that I own. I have high conviction in this stock. Tremendous total addressable market, or TAM. Part of the reason you've seen the stock sell off, of course, yesterday accelerated all growth stocks to be selling off a little bit harder, but Brazil inflation overshoots forecasts, and what we're going to probably see is higher interest rates. Now, of course, higher interest rates is going to impact consumers, and when you think about what MercadoLibre is, well, primarily it's going to be e-commerce. Of course, there's also the fintech portion of the business. But here's a quote from the CFO, basically saying, hey, we're going to see rates increase in Brazil, and we've seen it in different countries we already operate. An importance here, though, ability to predict defaults. That's the biggest part of the cost structure of our products. Again, once again, we are seeing accelerating because we feel very confident about improvements that we've made on models, and we're reaching new segments of the population at lower risk. So I think macro overall, it does not affect this product as much. Current market cap, $87 billion. 69% forward earnings per share growth. Forward PE is 51.08. So when you look at the metrics on Seeking Alpha, growth is solid, A. Profitability, A+. The valuation, a D. Of course, with any quality business, you're going to pay a premium for the stock, especially in a bull market. But you're looking at a gap PE forward of about 51.42. Forward price to sales, 4.21. Looking at the RSI, the relative strength index, that's a 30.53. Now, if you're not familiar with RSI, essentially it can go from 0 to 100. Anytime you get 30 or less, it's considered oversold. Anything 70 or higher is going to be overbought. Now, this is just one tool in the tool belt, but what it's telling you is that it's becoming oversold. Now, this metric can go all the way to 0, so the stock can certainly go lower. Now, on previous chart days that we do every single Wednesday at 9 o'clock a.m. Eastern in Patreon Discord, we said, hey, let's be honest, if you're buying MercadoLibre at $2,000, it's a chase. Well, this is a significant pullback. Now, this blue line is the trend line. You got the 200-day moving average here in the purple, the 100-day in the red, and the 50-day in yellow. The Fibonacci pivot point S3 is 1563 and 73 cents. So you can see we're not quite there. If it gets to this spot, around 1560, 1550 in this range, that's going to be the S3 and the trend line. If you really like the stock, you can, of course, dollar cost average all the way down. But for me personally, I own the stock much lower. If it gets to this range, I think it's attractive to DCA, to dollar cost average, knowing that it certainly could go lower. The next stock is AMD. And here's the thing, guys, with all of these stocks, you certainly can see lower prices. I'm going to look at a chart and show you what I think about AMD, where I would potentially buy the stock if I didn't already own it. Now, Wolf Research just reported that the outlook for AMD heading into January earnings is challenging. Uncertainty about meeting the $10 billion AI expectations with a guidance of $7 billion. So if you remember, AMD acquired a company called Xilinx and anticipates the second half of 2020 rather than the first half that you're going to see an acceleration. So the firm is reassessing its rating and estimates. Now, this stock got way ahead of itself. It was $227 in the 52-week high, and really today at $119.52, we're looking at the 52-week low. Market cap is about $197 billion. Forward EPS growth 13.38%. That forward PE ratio is a 36.53. Now, one thing to note here, you're going to see the gap forward PE ratio of 93.29. Now, this deals with the acquisition, and this will roll off. So generally, we like to look at that gap PE ratio, but in this circumstance, the non-gap, the forward, is actually more accurate at a 36.53. Now, that's not cheap by any means, but this is going to be an AI player when you think of data center. When you think of competition for NVIDIA, AMD is really the second fiddle. In addition, of course, AMD is going to do a lot more in the CPU space. So for PCs, laptops, things like that. The problem is, if you listen to Micron earnings last night, the guidance was down significantly. A lot of that had to do with consumer electronics. So I think you could see some pressure in 2025 in AMD, and the stock could drift lower from that. The RSI is below a 30 at 27.06, so technically it's oversold. Now, when something's oversold, it could have a bounce, but it doesn't mean that it has to sustain. Looking at a chart here, we are below the Fibonacci S3. We are below the blue line, this trend line, as well as the moving averages. You can see this topped out at 227. Often on chart day, we draw these circles circles when there's a trend line and say, hey, this is an air pocket, this is an air bubble. You never want to invest or FOMO chase when a stock is way up here, especially when you have a trend line that's much lower. We like to buy stocks when they come back to the trend line or even lower, and in this case, it's done exactly that. So technically, it's broken support all the way down to the S3, and it can go lower. It could also bottom anytime, but I do think it's very possible that you see something 115 to maybe even $97.65. Of course, that's going to require some sort of catalyst. The market taking a leg lower, missed earnings, and so on. So if you've been patient, congratulations. This is an area where you certainly could DCA. I think if you continue to be patient, you could see even lower prices. So when we think of generative AI, we talk about phase one, the infrastructure phase, stocks like NVIDIA and Broadcom and AMD. The second phase, and we've been talking about this on the channel for a long time. If you're not subscribed, this is a good opportunity. Smash that subscribe button. Also that bell so you don't miss the next video. Phase two of generative AI is going to take those LLMs. So the LLMs are built, the data centers build the LLMs with the infrastructure like NVIDIA GPUs. Companies like Snowflake, Mongodb, Elastic, and Palantir will be beneficiaries of phase two of generative AI. That's connecting those LLMs to enterprise business data so you can use chatbots with your own data internally and more. The third stock on the list is Mongodb, and if you've been following this stock, it's dropped hard since its recent earnings report. Now, at first glance, this was a really solid report. In fact, it beat by 47 cents on EPS, and the revenue was up 22.3% and beat by 33.66 million. Over 52,600 customers as of October 31st. Atlas revenue, so you think of that cloud, the recurring revenue, up 26% year over year and 68% of total Q3 revenue. The company also has $2.3 billion in cash and cash equivalents. So what's the problem? Now, this is from the earnings call transcript, and the first thing that made the stock reverse was this announcement. Michael Gordon, this is the company's CFO, who's been with the company for nearly 10 years and really helped MongoDB become what it is today. He led this IPO and helped the company revenue grow by nearly 50-fold. Well, Michael is leaving MongoDB, and the stock started to reverse. In addition to significant leadership changes, this also happened on the call. I posted this in Discord, but MongoDB said they expect to see a sequential decline in non-Atlas revenue in Q4. Now, if you understand what that means, you're talking about licensing revenue, professional services. The focus really should be the Atlas revenue, but it did spook the markets. Then you start seeing analyst downgrades, amid slow growth and sales challenges. But again, if you look at the earnings, this is everything at a glance. The earnings were pretty solid. Even the guidance isn't bad. Everything is beats and above across the board. This stock topped out at $509.62. That's a 52-week high, and I did trim some at $500 a share. Now it's lost 50% of its value since then. It's trading today at $247.58. The 52-week low is $212.74, so the stock could see some more pressure. Let's look at a chart. So when I trimmed at 500, I told the gang in Discord, I won't be surprised if this stock is below $300 in the future. Well, here we are. And in fact, on this recent chart day, the stock wasn't in this yellow circle. It was right above it. I said, hey, I think the stock's probably going to go in this yellow circle here. This S3 Fibonacci is $224. You can see it's below the moving averages, and it's in the middle of this yellow circle. I think it's actually possible this stock could see even more pressure, maybe even retest those $212 lows. It's possible you see something between $200 and $225 a share. Now, if I didn't own the stock and I really liked it, maybe I DCA under 250, but have the expectation that it's probably going to go lower. The thing about this stock is it's going to be impacted by interest rates. And the Fed just told us instead of doing 4 cuts in 2025, they're going to do more than likely 2. So any sort of high flyer stock like these SaaS software names, anything that relies on the consumer, interest rates, and spending, these sort of stocks will more than likely see pressure in 2025. But I think it's getting attractive here, and I really like it, especially 225 and less DCA. Now I've got 2 more stock picks, but before I go on, I want to announce that this information isn't always provided on YouTube, and this information was provided in Discord a long time ago. I've got a channel called Eric's Watch List, and I gave all these price targets. You could be watching the video a couple days later and the prices could change. Now it doesn't necessarily change the price that I would want to buy at, but for example, MongoDB, I could say, hey, 250 or less DCA. A couple days later, it might be above 250 or it could be much lower. But the point is, it's very hard to communicate communicate real-time information with you just on YouTube videos. So do yourself a favor, invest in our private community, join our Patreon Discord for 2025. The rates will increase next year, so lock your rate in today. The 4th stock on the list just had earnings last night. Earnings were actually pretty good. The problem was guidance. Micron beat on the top and bottom lines, but look at this miss on the revenue guidance. Micron expects revenue between 7.7 and 8.1 billion next quarter. The problem is that Wall Street expected $9 billion. So you're talking about a difference here of $1.07 billion. This is a huge miss. In addition to that, the EPS was also a miss by 50 cents. Now, the stock's not that expensive here. It's a 14 P ratio forward. It pays a small yield, 0.44%. So this is really a DGIF stock. The CEO on earnings said, while consumer-oriented markets are weaker in the near term, we anticipate a return to growth in the second half of our fiscal year. We continue to gain share in the highest margin and strategically important parts of the market and are exceptionally well positioned to leverage AI-driven growth to create substantial value for all stakeholders. The weakness here on the guidance comes from the consumer, specifically consumer electronics. AI is doing really strong, not so much on consumer electronics. So this is a stock that if I'm buying this, I'm thinking about holding it for several years. In fact, all the stocks we talk about today, we're really thinking about 3 or more years as a long-term investment. The current RSI is 35.12. So again, it's getting close to that oversold territory. This is another one of those stocks. We said, hey, don't FOMO chase this. It's way overextended. This is an air bubble. You never want to buy a stock when it's way above this trend line. There's a big air pocket here. So on chart day, even when it was $127, I said it was a massive FOMO chase. We didn't want to touch the stock at all when it was at the $150 level. Now it's come back and it's sitting right on this red trend line. It's also right around the S3 Fibonacci. So I told the gang this morning I like the stock $85 or less, and I could see it in a range between 75 and 85. I did actually buy this stock for the first time, a starter position at $84.97. It could find buyers and bottom anytime, but you do have this gap down, and so I do expect more pressure. So $75 to $85 cost average. Number 5, this is not one that I'm buying, but several members in our community are very bullish on Uber. Market cap is currently about $129 billion. The 4P ratio, 32.48. The 52-week high, $87. 52-week low, $54.84. Trading right now just above $60 a share. It does have 2.87% short interest. Another one that we covered on chart day, I drew up this circle and said this is the area that I'd probably dollar cost average if I were buying the stock. This S3 is $59.18, and you can see the stock pretty much bounced right off of that level. With that said, it could certainly see more weakness. In fact, back in August, it got below $55 a share. If you're new here, make sure you subscribe to the channel and smash that bell for notifications. And if this video is helpful, return the favor, drop me a like, drop me a comment. Have a great rest of your day. Happy holidays. Take care.